Assalamualaikum and hi to Dr. Manisa and all of my friends. Today, we would like to discuss about the COVID-19 pandemic impacts on the challenging year 2020 in Turkey. Before we start, I would like to introduce my group member, which is me, myself, Nur Amanina Muhammad Subari, Alisha binti Azmir, Balkis binti Zali, Nur Najiha binti Zulkafli, and Haziq Husaini bin Hetzir. Now, let's start our presentation.
A pastel study is a method for obtaining an overview of the environment of an industry. Pastel stand for political, economic, social, technological, legal, and environmental aspects. First, we move to political factor. Turkey applies separation of power and parliamentary system, but in year 2018, the system has changed. Turkey apply a new presidential system. The president will be both, which is will become the head of government and become the head of state. Next, economic factor. Turkey has applied mixed economy, in which the government and private sector together make contribution to economic growth. Turkey personal income tax rate varies by income level, ranging from 15% to 40%. For 2021, the basic corporate income tax rate will be 25%, up from 22% in 2018. In year 2022, the rate will be decreased to 23%. Social factor. Turkey is a secular government. The Muslim community accounts for over 9/10 of the total population. The country's main language is Turkish. However, some people also speak Kurdish. Next, we move to technology factor. In 2020, Turkey made an improvement in the technological area by producing high-tech medical gadgets to fight COVID-19. Turkey reportedly planned to finish the Tursat 6A project around 2022, making it one of the 10 nations in the world capable of producing its own satellite system. Next, legal factor. The society have to follow all the rules and regulations that have been stated in Turkey. Work law, well-being, security, global and other exchange guidelines as imperative are altogether factor to consider. The two local and outsider are dealt with similarly under the Turkish constitution, named as the Constitution of 1982. If an individual upfront Turkish banner, country and their money, individual can get fined, which is 3 to 5 years imprisonment. In legal issue, the court framework is unprejudiced and free, guaranteeing that everybody is dealt with decently. Lastly, environmental factor. Turkey's rich biodiversity is one of the country's natural assets. Turkey has a rich regular asset, yet additionally positioned 10 among European nations as far as biodiversity. Not just that, Turkey has a different scope of untamed life. However, they have a key developed products such as apple, chestnut, and pistachio. Turkey also faced with critical environmental worries such as air pollution and deforestation. SWOT analysis before. Trade. The world's second largest natural gas. Turkey played a vital part in the natural gas transit due to its location between the nation's second natural gas market within continental Europe. Investment before. Foreign direct investment in Turkey increased by 21% to 13.2 billion. In 2018, foreign direct investment in Turkey increased by 21% to 13.2 billion. According to the director of the Presidency Investment Office, Turkey garnered over 13.2 billion on foreign direct investment in 2018 at 21% increase over the previous year. Next, we move to weakness before. Trade. The lira depreciation has slew of negative implications. The depreciation of the Turkish lira is bad news for Turkey's exchange partner. The lira's devaluation has indeed increased the average yearly import price by 25%. The reduction in the value of local lira revenue make it more challenging for heavily indebted non-financial corporations to repay dollar-denominated debts. Next, investment before. Falling international reserve. The central bank has been selling foreign currency to prevent unhealthy price formation in the market. Not only that, Although there has been a slight improvement for Turkey's currency, but this effort is not sustainable. This is because the value of the Turkish currency once again experienced a decline. SWOT analysis before trade. The world's second largest natural gas, Turkey played a vital part in the natural gas transit due to its location between the nation's second natural gas market within continental Europe. Investment before. Foreign direct investment in Turkey increased by 21% to 13.2 billion. In 2018, foreign direct investment in Turkey increased by 21% to 13.2 billion, according to the Director of the Presidency Investment Office. Turkey garnered over 13.2 billion on foreign direct investment in 2018 at 21% increase over the previous year. Next, we move to weakness before trade. The lira depreciation has slew of negative implications. The depreciation of the Turkish lira is bad news for Turkey's exchange partner. The lira's devaluation has indeed increased the average yearly import price by 25%. The reduction in the value of local lira revenue made it more challenging for heavily indebted non-financial corporations to repay dollar-denominated debts. Next, investment before falling international reserve. The central bank has been selling foreign currency to prevent unhealthy price formation in the market. Not only that, although there has been a slight improvement for Turkish currency, but this effort is not sustainable. This is because the value of the Turkish currency once again experienced a decline.
We move to opportunities. Trade before pandemic. New export partnership with Turkey to boost UK trade. As part of an agreement to promote commercial cooperation and enhance investment between two nations, the United Kingdom and Turkey have co-financed projects and contracts. The International Trade Minister stated that the agreement will benefit their trade relations and enterprise in both nations, working with Turkey to gain contracts for UK and Turkish exporters, as well as strengthening assistance for UK firms operating with Turkey, will create new possibilities not only in Turkey but globally. For the investment before pandemic, Turkey governments began to prioritize taxation in its monetary agendas in order to secure stable public funding sources. The direct tax based on company earnings has grown in both developed as well as developing countries. Okay, for the threat before pandemic, conflict between the United States and Turkey have risen as a result of a dispute over the fate of Andrew Brunson. In an increasing political and trade conflict with the United States, Turkey levied heavy taxes on US alcohol, cigarettes, and other items. Okay, for the investment part, the Turkish lira has reached a new low against the US dollar. Turkish President Recep Erdogan vowing to decrease interest rates following the country's June election. The Turkish lira fell to its lowest level versus the US dollar, reaching 4.4527. Foreign investors may be faced with the decision over whether or not to invest in Turkey, given the growing opportunity provided by high interest rates on the Turkish lira. Turkish economic growth faces additional dangers as a result of rising inflation, current currency depreciation, high political tensions across the region, and more frequent conflicts, including its long-standing partner, the United States.
So now I will talk about Turkey's SWOT analysis after outbreak COVID-19. The strength for Turkey in investment after outbreak COVID-19 is quick recovery in natural gas market trade. After outbreak of COVID-19, Turkey has exported their natural gas almost 169.5 billion US dollar. According figures released by Turkey's Energy Authority, Turkey's natural gas import jumped by 24.3% in 2021 opposed to the similar period in 2020. According to Embra's statistic, the government imported 3.52 billion cubic meters of natural gas. Next, for trade, there is a wide chance for local people and foreigners to invest in more projects. Since Turkey lira has fallen, many foreigners are currently taking advantage, invest in Turkey, such as invest in real estate market by acquiring property. Meanwhile, local and investors seeking for methods to secure their investment. However, there are some weaknesses in investment that Turkey have to be faced, such as increasing inflation rates. This is because the Turkish lira has fallen, inflation has risen. This has caused all prices of basic goods, including the price of imported goods, increase. Not only that, your purchasing power in Turkey also decreased. Next, weakness in trade is Turkey economy has been overheating well above the central bank's aim of 5%. Many people have been affected due to government has reformed the financial system by lowering interest rates sharply. Although there are some weaknesses in trade, there are some opportunities after outbreak COVID-19, such as good relationships in trade between New Zealand and Turkey. New Zealand and Turkey have a good relationship, especially in trade. They have planned for promoting trade economy together and try to more contribute in trade. They are really want to work together to recover economy after pandemic COVID-19. Next, the opportunity in trade is Turkish government announced a new monetary policy system. The Turkish President Erdogan has reformed Turkey's monetary policy by trying to lower interest in the bank system. This is because Turkish president wants to attract investors to invest in Turkey. With a series of reductions in interest rate, the government aims to stimulate domestic investment and support export-oriented sectors. Next, for trade after outbreak COVID-19 is Turkey have been faced with relations problem with European Union. Turkey have to face problem with some issue between Turkey and European countries such as Greece. Besides that, there are many issues that make Turkey be more controversial among European Union. Besides that, there are many issues that make Turkey be more controversial among European Union. Lastly, the threat in trade for Turkey is unpredictability of Turkey's fiscal and monetary policy. Turkey's monetary policy, which is still under experimentation, the uncertainty of the latest monetary policy by Turkish President Erdogan has made many local and international investors feel not confident to invest in Turkey.
Okay, now let's move to the next part. Turkey government aids to firms and industries. Let's take a look. The Turkish government encourages and provides a solid regulatory framework to make portfolio investment easier. The existing law facilitates the free flow of financial resources into product and factor markets. On the local market, foreign investors can obtain financing, and the private sector has access to a wide range of financial instruments. The Presidency of the Republic of Turkey's Investment Office is the official entity responsible for marketing Turkey's investment value to the global business community and assisting investors before, during, and after their entry into Turkey. International investors must meet the same standards as local investors to create a company and transfer shares. International investors may establish any of the companies listed in the Turkish Commercial Code (TCC), which offers a corporate governance strategy that sets up the rules, encourages private equity and public offering activities, sets up transparency in operations management, as well as aligns the Turkish business environment with EU legislation and the EU accession process. Through investment promotion organizations and other methods, the government encourages foreign investment. Next, in March 2020, the Turkish government announced a USD 15 billion economic shield strategy to assist businesses in weathering the economic storm caused by the COVID-19 outbreak. The proposal also contained a variety of other proposals, ranging from tax breaks and payment deferrals for business tax bills to increase minimum pension payouts.
Aside from that, a slew of government organizations have established financial aid programs to help struggling businesses. Additional economic stimulus measures were implemented to ensure that Turkish banks delivered enough liquidity to the markets.
Assalamualaikum. For the next part, we will discussing about the significant changes in SWOT analysis. For that sector, we can see that Turkey has experienced a rapid V-shaped recovery from the economic crisis caused by the pandemic. Turkey expanded at 21.7% at the second quarter of 2021. The second one is the expansion for Turkey and other countries strengthen the trade economy of the countries. The enlargement will fully integrate Turkey into the world's largest trade bloc internal market, enabling practically all commodity and services to flow freely. Next, Turkey international trade deficit reached 51.3% at July 2021. Referring to the world trading market, the difference has increased to about 4.3 billion, up from roughly 2.83 billion a year earlier. Following a year of economic disruption caused by the pandemic, Turkey export increased 10.2% to 16.4 billion, while imports increased 16.8% to 20.7 billion. Turkey is a potential but sometimes difficult and challenging market environment and demand flexibility, effort, and perseverance. Many of the same challenges that exist in other developing countries such as inconsistency and contradictory policies, regulation, and paperwork tariff increase on the wide range of product and localization specification in various industries. Now, we move to the investment sector. The difference in strength of the investment sector that we can recognize is there is a slightly significant changes that lead to the increasement of the income per capita of the country. Turkey performance in economic development saw its income per capita increase from 3,581 in 2002 to 8,599 in 2020. Turkey objective will be maintain microeconomic stability while also planning for the long term. This method is to ensure microeconomic stability as well as an investment trust. Next, Turkey is struggling of the currency have dropped to the all-time low below the US dollar and the euro in recent months as President Recep Tayyip Erdogan pushed forward with the highly criticized move to the lower interest rate by raising the consumer costs. As a result, families are finding it difficult to purchase food and other necessities. The Turkish lira has lost roughly 40% of its value since the beginning of the year, making it one of the most performing currency. The third point is Turkey economy has potential for development in terms of inflation, reserve, and risk premium when compared to emerging economies. Furthermore, Turkey is one of the few nations that have provided considerable real interest rate since the beginning of 2021 as a result of monetary tightening that it adopted earlier and greater than similar countries. The risk premium impacting borrowing rate will continue to improve as Turkey government made headway in their effort on inflation and reserve building. Last but not least, by observing currency movement of Turkey, the central bank gross reserve fell by 1.6 billion to 109.4 billion in the first week of January due to the reduction in foreign currency reserve. currency intervention by the state, such as spending dollar to buy lira in order to stabilize it, has proven expensive.